If you invested $10,000 in Rivian stock 3 years ago, you would have just $1,360 left today. The company has eviscerated 86% of shareholder value in the last 3 years. Now, 3 years, I'm talking about March 13th, 2020. If you had bought the stock then, you will have lost 86.4% of your value and only be left with $1,360. That's an absolute evisceration of shareholder value. So, how did the company get here? How did it lose so much value? That's what I'm going to talk about in this video, as well as answer if this is a buying opportunity, if you should buy this dip, right? I know a lot of you are thinking that, okay, well, it's down 86%. Is that a buying opportunity? So I'll discuss how it's got to this point, and I'll answer if it's a buying opportunity. So let's get started. So in my opinion, what happened with Rivian stock is that investors got really excited about the potential. The potential. Electric vehicles are going to be the future. Rivian is the new electric vehicle company. The style looks great. It's got these orders. Amazon is making purchase order commitments. Amazon is backing Rivian, right? Amazon's one of the major investors in Rivian, and all of this hype and all of this enthusiasm and all of this excitement got investors pouring into Rivian. And then when they noticed, man, look at the revenue. Look at this revenue growth, right? So like it just jumped out from 400 million and it's went all the way up to 1.65 billion in revenue. And even before this revenue growth, when it was launching and it was announcing these pre-orders and all of these deals with Amazon, investors just got so excited. And this was the theme with nearly any stock that had to do with electric vehicles in 2020, in 2021 was absolutely exploding, right? If you were an EV battery stock, if you were anything to do with, if you were an actual car company like Rivian, Tesla, Lucid, and Neo and others, everything just got these explosive valuations, all on potential, all on what it could possibly do in the future before ever proving anything to investors. Now, if you've been watching my channel, that's the total opposite of what I suggest to my viewers. I typically look for companies that have proven themselves, that deserve your investment, right? Your hard earned dollars. You go to work to earn these dollars, and you don't just want to throw them into a company that hasn't earned it, right? You want to put your money in a company that has earned your investment. And in my opinion, Rivian has not done that. Now, look at the potential, right? Look at that revenue growth, explosive and exciting, right? But here, the next slide will really show you what is the actual value creator, and that is earnings per share. Earnings per share, profitability, cash flow. These are the things that I look at more importantly than revenue growth, than potential, than market size, than all of those other things that you might get excited about as an investor, right? Sure, all of those things are nice, right? But what I would actually like to have instead of all of those things are profits, are cash flow. And Rivian is not doing that. In fact, it's doing the opposite. Earnings per share over the trailing 12 months have just been going in the wrong direction. From right when it started, of course, you don't expect it to be profitable in the launch phases as it's just ramping up. But it's been a couple of years now and it's just moving in the opposite direction. Only recently has it kind of made a move in the right direction here, but still, earnings per share just going downward, negative $7.41 in the most recent trailing 12 months. Now, if you had asked me a couple of years ago what the company's earnings prospects were, I would have told you back then that it's going to be hard for this company to generate profits. Starting and running a car company is an extremely difficult task. Doing it with an innovative new technology like electric vehicles makes it that much more difficult. And so when you're taking on this very, very difficult task and you're putting in billions and billions of dollars, there's going to be some fits and start. There's going to be some learning curve that needs to be established before or if ever you start to turn a profit. And I think the market was not accepting just how difficult that is, just how challenging that is to come out of nowhere and start a car company and think that you're going to compete with the big boys, with the companies that have been doing this for a century, right? When you're thinking about Ford and GM and Honda and Toyota and Mercedes and all of these and Volkswagen and all of these legacy companies that you're now jumping in to compete with, they've been doing this for a century. You think you're going to come in and just be successful? You think they're just going to let you come in and take their market share? They're not going to do that. If you announce a new electric vehicle model that gains popularity, that starts to take market share, they're going to come out with their own model. You lower your price, they're going to lower their price, and they're going to compete with you. And guess what? They've got 100 years of history in doing this. And they've got the resources, they've got the assets, they've got the billions of dollars. And so it's not going to be easy. And you're seeing that play out right now in the electric vehicle industry, right? Tesla is the only one that's really achieved profitable success in the EV industry, and even Tesla now is facing the headwinds from competition. They're all lowering prices, costs of goods sold are rising, profitability is going to be harder to come by. And so for all these reasons, Rivian stock price has crashed 86%. Now, is this a buying opportunity? Let's look at its valuation to answer that question. So, I could only use a price to sales ratio to value Rivian because it's not profitable on the bottom line, so I can't use price to earnings, which is my preferred metric, and I can't use price to free cash flow because it's also burning through a lot of cash flow. It's negative cash flow. So according to a price to sales ratio, it's trading at 7.269, near the lowest it has ever traded for in its brief public history, right? It was trading all the way up at 60 at one point, which in my opinion it should never have gotten there, right? I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. However, I don't believe this is a buying opportunity. I don't believe that the stock price decline is an opportunity to jump in and buy this stock because for all of the reasons I mentioned already. It's going to be very difficult for Rivian to ramp up production and sales to a level to generate profitability at any reasonable level for the next few years. So you shouldn't expect this company to be profitable, certainly not in 2023, probably not in 2024, probably not in 2025. Maybe in 2026 you can start to gain some insights to when it might turn a profit, if it's still around at that time, if it hasn't already burned through. Now it's got a large cash pile. It's got over $10 billion in cash, so it's got a long runway to go to get this thing right. It's got time on its hands because it has those billions of dollars, but that doesn't necessarily mean it's going to get it right. Doesn't necessarily mean it's going to get it right. And you still don't know when or if it does become profitable. What are its earnings prospects going to be? How much earnings can you expect? It's a lot of speculation right now. The stock is still very, very risky. And so for that reason, I don't think that this 84% stock price decline is a buying opportunity. Okay, so that's all I've got for this video. I hope that you weren't one of the folks that were invested in Rivian stock and saw your wealth decline by this much, because that hurts. That's painful. Nobody wants to be in that kind of stock that loses that kind of value. So I hope you weren't one of those. But if you subscribe, watch the videos, do your due diligence, look for companies that deliver earnings. Hopefully you can avoid these kinds of disasters in the future. All right, that's all I've got for this video. Thank you so much for watching. I'm going to add a couple of videos at the end of this one that I think you might enjoy. So please click on one of those. I'll see you over there.